Hey, what is up, everybody? So, thank you for joining me for the announcement of what the Fed's going to say. I've got CNBC. Let me just move my desk over. Oh my God, I'm so strong. Wasn't going to curse there. I'm not. See, now it's happening with my computer. All right, let's just get into it. So, let's get into what is potentially going to happen. Let's get that down for the market today. So, I've got it right here. You got your pump scenario and your dump scenario. So, right now, the SPY is sitting at like 386 and a quarter. Your pump scenario, and don't be surprised if this happens, because let's go into what could happen and I'll explain what interest rates are used for. So the pump scenario is, hey, we all expected 75 basis points. That's what they're telling us. We knew that. And the only reason I say there could be a pump scenario is, although Apple's the most shorted stock, Apple, they're buying Tesla, they're buying other stocks that are turning around that should be selling off. They are buying, and I see them buying the options and then selling some puts to cover that. So I think there could be a pump. Now, what if we get a dump? What if we get the dump scenario? Okay, well, the dump scenario. So first of all, the pump scenario, you'd see the market go to 388 right away, and then it might reject 392. But understand, if the market pumps, then it's likely to pump tomorrow. Okay, if the market dumps on itself, it's going to go down slowly. It's going to go down, drop, then it's going to go up, then drop. So 383, 382, 379. But let me explain exactly what's going to happen and then why it's going to happen like that, okay? So exactly what's going to happen is, say the market spikes right away, it's going to pull back like almost instantaneously, and then it'll spike again because the institutions are trying to fool you. They're trying to get you to scare sell. They're trying to get you to, shit your position like that. Okay, now let's go on and we'll talk about why interest rates are important before I pull them up live. CNBC, we can all listen live and then process the information, okay? So why interest rates are important? Because corporate debt right now is at 11 trillion just for the U.S. 11 trillion with a T. Okay, the Fed's balance sheet 9.5 trillion. Okay, so corporate debt is larger than the Fed's balance sheet, and we all know how large the Fed's balance sheet is. So corporate debt just for America is 11 trillion. Now worldwide, it's 22 trillion. So half here, half someplace else. Now interest rates go up, and you're seeing the 2-year go up, right? 2 years like at almost 4%. The 10 years going up. So as interest rates go up, it costs these companies more money to reorganize their debt, to get their debt reissued. So they're paying more money. When they're paying more money, their earnings go down. When the earnings go down and the PEs are sitting at the same, in order to have the same PE for Google, Meta, Apple, it has to go down, okay? So interest rates go up, should be bad for the stocks. Now, what they're saying is we knew 75 basis points are baked in. So the other scenario where the market might dump on itself is if they come out and they say 100 basis points. If they say 100 basis points and the Fed's being that aggressive, it scares the shit out of the market and everybody will dump their stock. Well, what's happening right now, I predicted pre-announcement, they're going to buy that up. So again, if they pump it, just so everybody's clear and you know how long to hold your positions, because again, as soon as the news comes out in about a minute or 2 minutes, actually, what's going to happen is it's going to go up, down, huge swings. Like 2 points on the SPY, which will be like 0.5%. So again, if they're going to pump it, you're going to look for 388. The next level up you could hold to is just under 392, but I put 392. If they're going to dump it, you'll see it drop to 385, then it'll go back to 386.40, and then it'll drop real hard to 383. So prepare yourself. If you're holding puts, you want to continue to hold your puts. Okay. Now me, I got into some Amazon calls. I took a very small position. 3 contracts. Why? Because they like to pump the market before the announcement. We still have 1 minute and 15 seconds left. I see the Fed decision there. I will bring it up and I will unmute it. So ask your questions, please. As we're all listening, ask your questions because I'm going to try and answer them. But again, let's just get to it. Let's add it to the stream. Let's unmute her. Which I can
by the prior 2 guests, the Fed's going to hike further than we had thought and going to stay there for a little bit longer than we thought as well. So I think investors are positioning for that. But what you see in the yield curve is interesting, which is investors are also coming around to the fact that this is going to slow down the economy. So you've got this inversion, you've got this problem in the yield curve that's reflecting a lot of uncertainty about the economic outlook. So we're going to have to deal with that next year.
Jim, I'm going to come back to you because David is worried that the Fed may go too far and stay there too long and really damage the economy. You seem to have a more nuanced view of that. I've got 45 seconds. Explain why you are less worried about the economy seemingly than David is. Quickly.
Well, I think that we're likely to have a mild recession. There's no question about that. It's just the idea, though, is that the labor market is as strong as it is. It's very hard to have a deep, protracted recession when the labor market is so strong. So it's not that the Fed won't hike rates too far and keep them there for too long. They probably will. It's just a question of how much of an impact does that have on the broader economy, and how much of a recession most likely does that cause, and how deep will that recession actually be. And I'm in the camp that it might be a little bit more on the mild side, even if we have one.
Right. Well, we are in a complicated time, both in terms of the economy, in terms of geopolitics, and the rest. We've got about 10 seconds now until we can go to Steve Liesman for the news, and let's do that right now.
The Federal Reserve raising interest rates by 0.75 percentage point to a new range of 3 and 3.25%, the highest rate since early 2008. The Fed saying that ongoing increases will likely be appropriate in the funds rate. The Fed also saying inflation remains elevated. It sharply raised the median forecast of a Federal Reserve official, sharply raising the outlook for the funds rate for this year to 4.4% from 3.4%, so a full percentage point. By the way, that is a little higher than the market was going into this meeting here. For 2023, the median forecast is for a 4.6% funds rate. Again, a bit higher on the peak rate than where the market was, and that was from 3.8. For 2024, the median forecast is 3.9 from 3.4. 10 members do see a number below that 3.9 level. So if you want to think about the Federal Reserve cutting rates, that looks like it's going to happen sometime in 2024, getting back down to the new number we have for 2025, and that is 3.9%. A sharply lower GDP outlook, just 0.2% forecast for this year, down from 1.7. 1.2% for 2023, down from 1.7, and then gradually the Fed sees the economic growth getting back towards the trend of 1.8%. A big but not tremendous increase in the unemployment rate outlook for.
Okay, let's just freeze them for a second. So I'm looking at the SPY right now. The SPY is
percentage point or more higher than the low rate of 3.5, not a percentage point. Inflation nears the target of 2.3, not until 2024. Hits the target of 2% in 2025.
All right, let me just remove it for a second. All right, perfect. So let's remove it for a second. So why am I telling you all to wait, and why is it most important? Because the market just threw up on itself, but I don't want anybody to scare sell. If you're in calls, you're looking to see if the market bounces off 383. So right now the market's sitting at 383, like 50 something. The SPY is going pretty crazy. They were just buying the SPY after they sold it off. Now they're selling it again. So it's coming down to that 383 level. Okay, it just broke through that level. So let me but it just bounced off. So that's what's important. I'm just really trying to see if it holds that level. I'm just going to see what my two positions are. I'm in some UVXY calls right now, and I was in some Amazon calls. The Amazon calls are probably getting beat to a pulp, and the UVXY calls are probably spiking a bunch. I mean, I got in at 10:05. It's 10:34 now. I think there's some craziness. It's going to be over. So I'm actually going to sell my position right now and secure profit with that. And with the Amazon calls, ooh, that's ugly. I'm glad I only have 3 of them. Okay, yeah. So the market's dumping. Let me just get the SPY back up so we can talk about that and I can answer any questions. Okay, what I mentioned previous to the announcement was if the SPY dumps, right? What are we going to look for on the SPY dump? It's going to go down slowly and surely, but you're going to say 383 is a pivot number. Then you're going to see 382. Now on the way up, it was going to go up like 3 or 4 points. It was just going to spike higher and higher. On the way down, there will be some support at each of those levels because that's where there's some supply in the SPY, right at the 383, 382, and then again at 379. So we broke through 383. So I told you a whole $1.50 ago that if we break through, we are going lower. So it is likely that we will test the 382 number. Oh, thank goodness I have it on the screen. And now we're at 382, like 30 right now. It is continuing to drop. So understand, when will the drop end? It could potentially end at 379. So again, if I'm holding puts on whatever I'm holding, I'm probably going to continue to hold right now and just hold it for a little longer. Or maybe I would take half off the table to secure profit because nothing goes straight up or down. Again, we saw a little support at 383. Now we saw a little support at 382. And again, we're at 382, 30 something. Now we're dropping to 382 flat. Now we're in the 381 zone, okay? So everything that I said is coming to fruition. Meaning we're going to see 383 if it's bad news. And I guess the market didn't have the 75 basis points baked in because that's bad news. 75 basis points, everybody was expecting. So you're expecting 75 basis points, and it happens. I expected the market actually to shoot up right away. But again, I was double positioned. You're positioned both ways. So I probably lost like $80 on one trade and made like $1,080 on the other trade. So it happened to work out well. If Amazon took off and if UVXY went down, UVXY would be worth nothing. Amazon would probably be worth, an extra $2,000. So it covers my loss on either side. If you wanted to gamble, you could have just played the downside because we are in a bear market. I speak about myself being a bear. Okay, now the SPY just broke 381. So the next level on the SPY, we will probably see 379. Do we see it today? I really don't tell you. I mean, I can tell you the way they're selling the market off right now, it would not surprise me. Because as the market's dropping, you have to understand there's got to be enough institution, enough big money to step into the marketplace and say, okay, I want to buy. This is the bottom. This is the level I'm comfortable with. Now, 381.10 was the low from the other day. I think we touched under there like a couple of minutes ago. We bounced off 381. So again, we're sitting at 381.50. If we go up, if the market starts to recover and you're a bull or a bear, you want to see it break through 382. If it rejects 382 and trades back to 381 in this range, it's probably going down further, okay? If it happens to break 382, then you're saying, okay, 383 is the main number. So you're watching that. Now, above 383, that's a nice big jump. So if the market turned bullish for some reason, again, what they usually play games with us is they'll shoot the market up, then they'll drop it down, then they'll shoot it up. But that's not what's happening. Fed made their announcement at 2 o'clock. The market sold off. Somebody caught the falling knife and jumped in, and then it sold off each consecutive minute. Somebody caught the falling knife a minute ago at 381. And now again, we're 381 and a bit, but more than likely we're going to go down. So let me bring up some questions. Let me go to the front. If you have a question, please put the question. I'm here to help you process the market. So what's important is what the Fed's going to say next. And that's not coming out until 2:30 when Jerome Powell speaks. But what's going to happen when he says next? He's going to talk about reducing the Fed's balance sheet, which I haven't seen them do. And again, we're only in month 1 of them reducing the balance sheet. So things will probably get worse on the market. Again, people are going to say, okay, well, I'm going to get that dead cat bounce. I'm going to get the bounce higher end of day, something like that. I'd be very weary of that. Again, you have to understand, big money was taking major positions that negative against the market. They didn't just get out after this announcement. They didn't say 381 on the SPY. Shit, we're happy. Let's take our money and go home. No, they bought out SPY puts until October. They bought out tons of Apple puts. Oh my God, those Apple puts I'm in. I'm wondering how much those are worth now. What is Apple at? 155 flat, right? Oh, holy cow. I would have been so green on those. Yesterday, I bought out till Friday, and then I was like, okay, well, they're shooting Apple up. I better put in a stop loss. I don't like stop losses. All right, let's see if we have any questions here. Again, case in point, if I hadn't used a stop loss, I would have been crushing my Apple puts. I'm going to buy. What did Jay Powell say? Okay, so Jay Powell didn't say anything. I don't see any questions yet, so I'm just going to go a little further here. So again, here's what you're looking to hear Jay Powell speak about. At least the banks are and institutions, and understand banks and institutions are the ones with the big money, okay? The ones with the big money, they control the market. So you're looking to hear Jay Powell say something like, we're looking for, by the end of next year, by the end of 2024, we're looking to have the interest rate down somewhere around 4% or slightly there under, okay? The banks want to hear, they know rates are going up. They're like, okay, we know rates are going up in September. Rates are going to go up in November, probably like 50 basis points, maybe 75 basis points, okay? They could go up in December. They want to hear when the Fed is talking about, if we keep raising them, when are we going to take them down? That's exactly what everybody's waiting on, okay? Apple got a little bounce. I wonder if Amazon got Amazon got a little bounce too. So that's not bad. That's why I suggest to everybody, let's see where the SPY is, because you might want to exit out of those SPY, and then you could always get back in. There's no need to ride the elevator. Okay, SPY just went past 383, so it blew past 382. It's 383. Understand, support's either going to be at 383, okay? It's either going to support there, and we're going to go higher back to like 388, or it's going to get sick and throw up on itself. Okay, so it's 383.40, now back to 383 flat. Now we're just under. So again, 383. So people were looking for that bounce. They got the bounce at 383, and 383 just rejected. So keep your eyes on the SPY 383. Again, you're in calls. You want the SPY to break 383 and head towards 384. That would be extremely bullish, because then it would probably go back to 386. So if you're in calls and they got beat up over this this announcement by the Fed, and you're seeing the market turn around, okay. If I'm in SPY puts, I already secured profit. 383, 382. We went to 380 and change. Again, I said we could go to 379, and that could come, but there's no reason to ride the elevator. So that's basically the gist of it. Please, let's see. Can you swing a call? No. So I posted in Discord. I posted on Twitter. I even posted on Webull what generally happens the next day. So right now, understand the SPY is negative by 0.26%. There is a possibility the SPY turns green back where we were this morning because everybody said 75 basis points and your stocks all finished exactly where they were right before the Fed spoke. So I'll mention Amazon, 122 and change, 122.08, 122.10, something like that. That would be a bull case scenario, and the market would probably do okay tomorrow. A bear case scenario is we just broke under 383. We go back to 382 again on the way down. It's so important because the levels are so much closer for support. There are people buying up SPY at 382.10, at 381, and then we saw it bounce off 380 flat earlier. So it's going to be a fight in the market. Again, I suggested double positions entering this talk. Again, I'm a bear in the market, but it would not have surprised me to see the market go stronger. So again, I want Amazon on one side for the bullish position and UVXY for the bearish position. Okay. Would I suggest sitting on the sidelines till after 2:30? Actually, if you're on the sidelines right now, I would suggest you sit on the sidelines. Again, who's on the sidelines? Someone that doesn't know if the market's going up or down. Do I know right now? No, I said it could go to 379 or it could bounce to E386. So I'm sitting on the sidelines. You could be sitting on the sidelines. If you have a small account, say you only have like $100, $200, you're probably on the sidelines because why would you want to risk half of your account or your full account on a trade where you're like, okay, I know the market's going back up and then it dumps to 379 tomorrow. Remember, when you buy options, you only have a certain amount of time. So IVs were crazy intense right before the announcement. So anything you were holding, if it was just staying put, you were probably making money because the IVs were going up. With that said, we've got Jerome Powell. He will be speaking at 2:30. I'll let you all watch that as we sit at 382 again. So there was a little bump up. It hit line of support at 383, and then it dropped to 382. So right now we're at 382. Most likely we will test 381 again. If we test 381, it's likely we'll test the low of the day, which was 380.26. Again, I'm a bear. I wish I held my Apple puts longer. That's about it. I will talk to you guys later. Thank you for joining me, and this was fun. Next time, more questions.